2012, China definitely will face a tougher trade environment, largely on very uncertain European debt issues, rising renminbi, and also rising wages in China. If trade protection become a big issue, I would say that Chinese trade environment will be tougher than 2011.
I want to just get your view here as well, because we'll come to the RMB story and indeed the wages as well, and inflation generally. But what about what we have in this trade data? It could tell us a lot about the pressure then that Tim Geithner can put on authorities in Beijing as he starts his visit there. Yeah. Because if we do see a narrowing, it gives him less ammunition. But if we get a figure like yours, that could actually mean that well, he's got a bit more to play with if he's going to say that, well, it's clear still that the RMB is overvalued, or should I say significantly undervalued, to be precise. And, you know, will it come out because he's there?
Well, I think renminbi issue will be a U.S. presidential campaign issue. We have seen a lot of Republican candidates targeting China on this very particular issue. Going forward, we think that in 2012, China's trade surplus as a share of GDP will continue to decline to around 1.3 to 1.5%. The total amount could be around 120 billion US dollars.
So isn't that a factor of just the economy getting bigger, essentially?
Indeed. You know, at this moment, you know, China is already the second largest economy. Its international trade is perhaps has already topped the United States as the #1 country. And so if renminbi were to devaluate, and that means China will be accused to take the back thy neighbor policy, and that will not take easily in Washington.
Okay, yeah, you've got a 3% appreciation of the RMB through the course of this year, but some are saying out there now that you could actually see it go down against the dollar. What do you think that's impossible, though?
Well, at this moment, given our forecast that the trade surplus will continue, and China still has a quite sizable foreign exchange reserve, and China is asked to take more responsibility globally, and China will be asked to share the burden with the United States to somewhat boost the global economy for the coming year.
Everybody's worried about Europe. I mean, even the Chinese are here too, aren't they? And that's for certain. And, so with that in mind, the biggest threat, though, for the Chinese economy, is it as one of them is, as UBS says, that if we don't have a easing of restrictions on house purchases, we could actually see that property market just go down and down and down.
Yeah, indeed, if you look at China's economy, it's mainly domestic demand driven, and in particular, investment lead the way for economic growth. Within China's investment, you can see that property market investment is quite substantial, accounting to 25% of overall investment. If a property market experiences a slump, that means Chinese investment growth will also fall. At this moment, given there's no alternative engine to drive China's economy, indeed a property market slump is a major risk for the Chinese economy.
Li-Gang, thank you so much for joining us.
Thank you.